Welcome back to another exciting Around the Crypto Canaverse. Today, we'll explore how SmartBlocks, a real estate tokenization platform, helps businesses unlock asset potential through security tokens, asset fractionalization, and DeFi solutions. We'll also learn from real case studies how SmartBlocks ensures clients' tokenization offerings are successfully completed and sold. But before we get started, we'd like to present our Bible verse today, Psalms 24:1. Alan, take it away.
Yes, welcome to another week of a Crypto Cannabis show. Thank you so much for everyone's taking their time to come to our show on a weekly basis. Our verse, Crystal, thank you for sending this over to me. It comes from Psalms 24:1, and it reads, one Bible verse that mentions land or real estate. Okay, so this definitely pertains to what we're discussing about. The earth is the Lord's and everything in it, the world and all who live in it. It's a short verse. It comes from Psalm 24:1. The verse highlights the idea that all land and property ultimately belong to God. It reminds believers of the importance of stewardship and responsible use of the resources entrusted to Him. So anything that comes from above comes from the Lord, comes from our God, and we always want to make sure we steward it in the right way, where we don't waste the resources that comes from above. So I love this verse because it just shares with us about, everything all comes from above, and it comes from God, and comes from even the lands and the earth and everything, all the resources that comes from the earth. So thank you, Crystal.
You're welcome, Alan. Thank you so much. I'd like to welcome back our amazing guest co-host, Mr. Kenneth Knoll, aka Crypto Kenny. He is an investor, entrepreneur, builder, manager, and so much more. Welcome, Kenny. How's it going?
It's going great. The so much more is I'm a dad to a half a dozen crazy kids, and that's what all the rest of it like spills into that. So it's going great though. Super happy to be on the show. I love getting to speak with everybody on here. I think I've got to personally meet or be on panels with pretty much everybody here. So it's good to see you all again. Thanks for having me.
Yeah, the crypto community is definitely a small community, and we love help supporting each other. So thank you again for being here. Can you take a moment to tell us about block safe solutions and NC management?
Yeah, for sure. So as many of us are in the space that have been here a long time, I've been in blockchain technology and cryptocurrency for almost a decade now. I've spent that time investing and building, developing those types of things. And most of us have our hands in quite a few jars. Currently, the majority of my time in the space is devoted to a couple different businesses that we run. One is BlockSafe Solutions, which is a full stack white glove development service. We develop and help entrepreneurs, early startups, and then solidified and kind of legacy companies that are wanting to bring blockchain elements to their current businesses. So we do a lot of development over there, everything from your PFP collections for your local artists all the way up to exchanges and dexes and complex smart contracts, all these types of things. The other that I'm involved in with Clayton here is NC Management. We are a company that focuses on the crypto affluent and assisting them in retaining and deploying and managing some of their investments in the space, and helping them out with sourcing of workforce and just automation of some of the tasks they have to go into. And we do quite a few other things, fundraising, assistance with fundraising, and a few other areas there. But yeah, those are my primary focuses. Besides for that, personally, I'm a personal investor in the space. I've been around for quite a long time. I'm a lover of the technology, and I am once again a dad to quite a few children that I'm trying to bring up, loving the entrepreneurial spirit, trying to instill that in them. But yep, that's me.
Well, thank you for joining us today. Going back to block safe solutions, do you guys also tokenize like art?
Yeah, so we've done when you ask what we've been involved with, BlockSafe has been involved with so many different emerging trends in the market. I mean, we've done fractionalization of digital assets. We've been involved with several RWAs. We've built 3 different exchanges now. Some of them focusing mostly on NFTs. Some of them focusing on multiple types of smart contracts. So it's fun, and I think that's the part I really enjoy about it, is being able to experience all these different evolving areas of the technology, and we get a little piece of all of it. I'm not the I'm the kind of person that has a very darting attention span. So if I get to work on a cool RWA project one day, and then the next day I'm talking to an artist that's trying to get their art collection out, I think, and then next day I'm talking to a game developer that has blockchain mechanics to it. It's really fun to constantly be able to be in those different areas and assist those builders in all those different areas.
Yeah, variety is the spice of life. The reason why I brought up art is because Clayton and I recently spoke to this art dealer out of Dubai, and he works with several different family offices in helping them, secure art. And so I
Mhm.
thought that would be an interesting introduction for you.
Oh yeah, that would be really interesting. I mean, and I'm sure that Mark will talk a good bit about this today too. But really, I think that the fractionalization of assets, of property, and assets are going to be such a big wave in the next couple years. I think that it is the real solid use case that the financial industry has really looked at, to really legitimize the tech behind blockchain technology. And I mean, I'm here to fractionalize anything. We've had conversations with the builders, and I mean, I think that everything that is ownable and has value should have a place where it can be fractionalized. I think that everyone, whether you're a front counter worker at McDonald's or a CEO of a Fortune 500, you should have the opportunity to invest in real estate, to invest in art, to invest in small business startups, these types of things. And fractionalization, with the security and the finality of blockchain tech, is the way to do that.
For before we hop into introducing our speaker for today, can you tell our other entrepreneurs that are watching, what kind of issues are you currently facing or lessons do you have?
Yeah, I think that's a super interesting question, man, because when people ask me that, I've come to a place in my journey as an entrepreneur where that we have really good periods and we have really difficult periods, right? I never say bad, because nothing that we experience is ever bad unless we allow it to be, right? It's all opportunity to change something that we need to change to make it better. So I think one of the most difficult things as a young entrepreneur, or maybe, age doesn't really matter, maybe it's just your first go into the entrepreneurial landscape, is to take the difficult periods as opportunities to better yourself and your product, right? And once you get, I think that's the biggest hurdle that entrepreneurs have, is they can have some success and they go through a difficult period, and a lot of times that disheartens them enough to not stay the course. And I promise you that in decades of experience myself, and then also with other partners that I've been with, like, if you can get to the point where you view the opportunities as just that, as opportunities to improve, then it makes the whole journey, it kind of puts that whole experience together. So right now, one of the big things is that we see is specifically in the blockchain industry, is things are hot right now, right? Things are starting to heat up. You have a lot of interest now that wasn't there 6 months ago, and everything's looking kind of cool and great at the moment. But the reality is that 2 months from now, the money that's coming in now, the experience that's coming in now, the interest, it could die off, right? And there could be, we just had, an 18-month period of a completely dead market where no one wanted to put anything into it, right? But if you focus on that time frame, you say, okay, well, so these items are not here at the moment. What else can I focus on to be building during this time frame? Because it will come back around, right? And if you can itemize yourself with that type of mindset to think about, well, I'm not going to worry about what I can't control at the moment, which is maybe the investment money that's available or the people that are available to work with, and think about, well, what can I do at this moment? So, for example, during the down periods, we made a lot of relationships with people that were still actively developing in the industry, and those things have turned into very profitable partnerships and development and all these different things, 18 months later. So it spent time doing that. So, think of it as a journey. It's not a sprint, right? We're not here to do good, constantly for 6 months. We're here to have ups and downs over years and years and to continue to build something in an upwards momentum. And if you can look at it that way as a marathon instead of a sprint, it's probably one of the greatest things you could do for yourself as an entrepreneur.
Yeah, that's great advice. Making sure that you stay passionate and you're doing what's passionate will keep you going through those ups and downs. And really, the downs is where you learn everything and how you can, help your ups even better. So I love that advice. Thank you so much again for being here and sharing that with our listeners and viewers. Let's go ahead and welcome the founder of SmartBlocks, Mr. Mark Fiddleman. Welcome.
Thank you, Crystal. Good to be on the show again. This is my second time. I'm surprised you let me back, but I'll take it.
Thank you. Can you tell everyone where you're located, and also go ahead and go into, how you got into real estate and developing a tokenization platform?
Okay, great question. So I'm in Southern California. I kind of bounce between LA and San Diego. I actually got into real estate right out of college. I was doing mortgage banking for commercial and residential real estate. Kind of realized I didn't like the ups and downs of real estate, and the loans would go up and interest rates, they'd go down. It totally impacts people's businesses. I know most people can relate to that right now if you're in mortgage banking. So I decided to go the tech route. And so I spent time in mortgage banking. I did get my real estate broker's license at the time, so I was investing alongside the income I was earning in tech. Eventually got into a commercial real estate business in India when it opened up in 2006. So we built commercial real estate buildings in India. Then got back into tech. Had a tech career where I was a Section 16 officer of a publicly traded company that does the on-officer cameras and tasers. You guys have probably heard of them. And then went back when cryptos just started when I was exposed to it, 2013, 2014, I thought Bitcoin was a sham. Remember, it's 2013, 2014. None of this has been developed. We don't have the infrastructure back then that we do now. And it wasn't until Ethereum that I said, okay, the light bulb clicked on. I'm like, programmable money platform where you could build other things on top of these crypto blockchain systems that are out there. That to me was the game changer. Everything, the light bulb went on. I moved into crypto at the time, only got out of it because of the FTX fiascos and all the criminal activity that was going on along the way. Because I'm like, they're going to regulate this stuff. There's no possible way they're going to continue not to, or they'll create their own, like a CDBC, or they'll outlaw, something like Bitcoin. I saw all the possibilities, and we should all be afraid of a CDBC that the U.S. government were to issue if they were to issue one. But let's hope that doesn't happen. Regardless, I moved into the asset securitization aspect. It's called tokenization. It's not quite crypto, but we use all the same tools. And it's not crypto because it can't be hacked, can't be stolen. It's backed by a real asset, and we follow a legal process no matter where we are. And although that we use the same tools, it doesn't act the same way. Anyway, I got into that, and I wanted to combine my two loves. The most money I've ever made is in real estate with technology, and we created this real estate tokenization platform. It's different from the fractionalization real estate platforms that are out there. There's a couple that are doing quite well, actually. When you fractionalize real estate, it's really a share of that real estate. And it can't be traded anywhere. They don't have any DeFi capabilities, if your audience is familiar with that. When you tokenize something and you put it on a blockchain, the possibilities are endless. And with smart contracts, with the global access to an investor base, with the ability to take those tokens that have been minted from the property itself and collateralize them and borrow against them, I mean, there's so many opportunities. I don't see how the traditional system can compete with it in 5 to 10 years. In fact, you see Larry Fink of BlackRock saying the same thing. He says the future of finance is tokenization. He's saying it over and over and over again. JP Morgan says it, HSBC says it. It's going to happen. The question is when. And there's a number of hurdles for all of us in the industry to get there. But still today, properties are being tokenized and those hurdles remain, but it's not insurmountable. It's not that expensive. It's just an unclear regulatory environment in some countries. In others, it's perfectly clear. If you go to El Salvador and Dubai and you tokenize through there, they're all regulated. Singapore is kind of the same way. Hong Kong. So anyway, make a long story short, that's how I got here.
That's great. Thank you. Are you currently operating in other countries since it's so regulated here in the United States?
It's legal to regulate. It's legal to open in the United States. We just can't do secondary market trading or DeFi. You could fractionalize real estate, perfectly legal. You could turn it in that. All you're doing is creating a share and you're digitizing that share and you're calling that a token. Yes, it's on the blockchain. It doesn't matter. It's perfectly legal. You have to follow one of the regulatory exemptions. We do Reg CF if it's under 5 million, or Reg D if it's over. And there's all those rules around these regulatory issues. You could do a Reg A, but I don't recommend it. It's too expensive and not worth the effort, in my opinion. So Reg D, Reg CF, as long as you follow that and you register that property or that whatever Reg CF or Reg D, you can start raising immediately. There's no approval process. You're just telling the SEC, hey, here's what we're doing. If anyone complains, you could take a look at what we've offered and what we've shown them and then let us know if there's any remedial measures that we have to take. So it's perfectly legal here. There's just aspects of it, the really important aspects of it that we have to do in other countries.
Thank you. What's a success story of you tokenizing real estate?
I think the biggest one would be the Aspen St. Regis. And this is some of our team members are a part of this because that happened in 2018. And they tokenized $18 million of their hotel and added a bunch of new features and things to it. In fact, if you were a token holder back then, I think you got a couple of free nights. That property or the token value was 18 million at the time. It's now worth 65 million. It's 5 years later. And my understanding is they're going to do a secondary offering on top of that quickly. So that's the most famous one. There's been a bunch that have been started, the giving out dividends. I just interviewed somebody that tokenized his entire portfolio of $65 million. His first name is Johnny. I can put the information in the show notes, the video that we did together. What they're seeing is they get access to a global investor base. So to me, that's the big one right now, as opposed to local. And anyone that's ever raised money for real estate, you got to do local pitches, or maybe you have a couple of LPs that fund everything you do if you're lucky, or you go to a fund, or you go borrow from a bank. But when you have something like tokenization, you can access the world. Because yes, in the US, if it's over $5 million, you can't market to unaccredited investors. If it's under 5 million, you certainly can. But most of the projects, like the Aspen St. Regis, are over $5 million. You can only market to accredited investors in the US. But outside the US, there's not that restriction. So literally, you can get somebody in India that wants to put $50 into your project, not a problem. As long as you're following the law, you're not committing fraud. The SEC and FINRA don't care. They care, but they don't mind that you're selling to an unaccredited investor. Don't commit fraud.
Yeah, that's really interesting. So when you guys are tokenizing a project, do you guys decide upfront, okay, we're going to accept this many investors? I mean, how does that go? How does that work?
We don't decide anything. It's the person that owns the real estate decides what they want, how to, and then we just set it up for them. We're simply the platform, a SaaS platform for them to do that. Think of us as like Airbnb. Instead of renting a property, we're just selling shares of it in that property. So so in fact, it looks like Airbnb when you go on it.
That makes sense. So developers would be a great client for you. How would a developer onboard onto your platform? What would they do?
Well, today, as we're just launching, you would fill out a form and we do it for them, and then we give them their own dashboard where they can control everything. I'd say in about 3 months, it'll be all self-service. Now, we have protections in place. Unlike crypto, where you could just throw anything out there, we have our own auditors. We have our own people take a look at the deal. But this is before it launches, and we make sure that everything's legally compliant. And then, assuming they pass all those background checks and the audit of, you don't want somebody saying a property's worth 10 million when it's really worth 1. We would
Right.
require an appraisal, and we would require our team to look at the financials to make sure it all matches up. Because you also state, oh, I'm going to give you 10% cash on cash. Here's our expected, here's our pro forma for what's going to happen in the next 5 years. Some of that, you've got to make sure they're being real. And so all of that's done before they get on the platform.
When you say the dashboard and they can control everything, what is everything?
They know all the shareholders. They can issue, let's say your wallet gets hacked and somebody steals your tokens. I don't know why they'd want to. First of all, they can't steal it unless their wallet is KYC AML. Does everybody know what KYC AML is in your audience, Crystal?
Possibly, but go ahead and
So
explain what that is.
KYC is Know Your Customer, AML is anti-money laundering. Our tokens will not transfer to a wallet that hasn't gone through that process. So that's a huge protection mechanism for them. But let's say they were, and a developer has got a dashboard that says, okay, I've got a new owner of my tokens, because it all reports back to the developer. I didn't authorize that if they have the ability to. Sometimes they want that ability, sometimes they do. I'm going to cancel those and reissue them back to the person that really owns it. So whether it's hacked or stolen or an unauthorized transaction that violates KYC AML, that developer has all that visibility and transparency right into that system. We like to call it a CRM for tokenization. It's not going to manage your property. We might get there at some point, but it is going to manage your investors. You can message them, they can message you. You could send out dividends like that. It'll end up in their bank account or their crypto wallet, however they want to be paid. That's what the developer sees and has access to.
That's really interesting. It seems like this platform actually cuts out a lot of middlemen and brings all of the tools and keys and information that a developer would need to have on hand right in front of them, instead of reaching out to, the middlemen to find out the information that they need.
I mean, what you've said unknowingly is what we're going towards in the next 2 years. Is we're going to disintermediate this entire industry. They just don't know it yet. I'm sorry to say it. You don't need title insurance if everything's on the blockchain. Everything about the property, it's going to be like Carfax for your home, your commercial project, your land, all will be on the blockchain eventually, not immediately. And I know every country will be different, but when governments start to learn that, oh, wait a second, I can collect the money right away, and I can see every transaction related to this property, so there's no shenanigans going on. They're going to be like requiring this in I'd say 5 years. The land department in Dubai already does. When you buy a fractionalized piece of real estate in Dubai, they just take their 5% out. It's just mandatory, and if a platform doesn't obey it, they get fined or in trouble. So You don't need title insurance. You're not going to need due diligence because all of it's on the blockchain, right? It'll be a home Carfax or a real estate Carfax. The transactions happen like that. You don't have to wait 60 days, 90 days. You don't have to have all these people involved. It's really going to be a big disintermediation. Moreover, mortgage lenders or property lenders, they're going to be disintermediated because I can do it a lot more cost effectively with these DeFi markets where you're staking or collateralizing the property tokens in these DeFi markets, and lenders bid on the right to lend you money, and you make that decision. And then all of the borrower's information, I'm sorry, all of the, if it's a house, you know, all of my information stored on my own ID token and updated constantly. And so they can see my credit risk profile if I'm buying a house. If I'm buying commercial property, all of the property due diligence information is on the token and the smart contract, and they can evaluate it from there. And then you're going to have AI that's evaluating all this. I don't want to go too far, Crystal, but that's kind of the vision for the next 5 to 10 years.
Yeah, no, I was actually just thinking about AI and how it's going to, help with the platform and bring everything into focus so quickly. And, I love that, the blockchain essentially helps cut out middlemen, and we all love that. So, with that, I'm going to pause and ask my panelists and guest co-host if they have any comments or questions.
I got a question for Mark. How would it change the escrow services for real estate? Because every time you buy a house, you got to go to an escrow company and sign your documents, pay the escrow fees, and they hold an escrow. Like, how would this change the escrow industry?
You're not going to need them. We're not ready yet, but you're not going to need them. And I know I'm talking blasphemy to a large group of people, but you will have these escrow services built into the smart contracts, and you will not be able to get around them unless you do the things that the smart contract requires. So money wouldn't be released. All of the right checks need to be into the smart contract. You as the buyer would have to agree to it. The seller would, maybe the regulatory authority would, and unless you have those, things wouldn't go forward. But it would all be digital and all be recorded and all be transparent.
For the older generation, right? The ones that they walk into a escrow service building, sit down, have a cup of coffee, put their fingerprint. I think that will be probably implemented somehow to give still, I guess, the homeowner the experience. The experience of going into a building and signing their digital documents, I guess, by then.
There's still people buying newspapers, so I know it won't all go away. But,
well, I'm saying it won't all go away.
But
so.
if I say I'm going to charge you an extra $5,000 for that, buy a house, or another $50,000 to buy a commercial property, you might think twice.
That line item gets saved right there. That $5,000.
Exactly. Yeah. And why is escrow scale depending on the amount? They're not doing any more work. Same with title. Well, title at least takes on title risk, but why is escrow scaling with the amount? It's ridiculous. But
it's probably just printing more paper.
More zeros, printing more zeros,
more stacks of paper that print. So it probably just costs, print more pieces of paper. Probably.
You got it.
We have Tom Fordeman, and then we'll go down to Kurt.
So, Mark, there's no question that all of us that have been involved in any kind of real estate dreads closings, right? So the sooner we get rid of those, the better. And escrow is part of that. The title stuff is part of that, and so forth. But as somebody that's also participated in some private equity stuff, I'm fascinated by the fact that, you'll be able to do these offerings. And regardless of whether it's for a startup or for real estate, kind of the process is still the same. It's just mounds of paperwork that it's like eye watering, just to be perfectly honest. A Reg D offering is just nuts. I mean, it's just, and if you got to do multiple rounds and all that kind of stuff, the amount of time it chews up is probably the biggest thing. So you're actually reducing an enormous amount of friction in the process, which is phenomenal. So my question for you though is, I'm also a systems guy, right? And so I think the vision is fantastic. The problem is there's no doubt that states and any of the authorities, if you call them that, that have their hands in all of this are just they're barely holding on systemically today. What are you going to do to try and get this rolling and rolled out so that this can actually plug into that world? Because right now, you're lucky if you can pay your income taxes online, let alone starting to talk about doing this kind of stuff.
You're so right, and they won't all come online in the next 10 years, even though that's my vision. But you have to show them, like we did in Dubai, how they're making more money faster with less friction by plugging directly into it. And by the way, because it's so transparent, they're going to say, "Wait a second, Crystal's trying to do a deal with Kenneth or Tom, and she's not paying her taxes. We're going to go right after her." So that's how you do it.
Well, I think that's awesome because right now that's another kind of thing is you have a lot of faith. You have to have a lot of faith because people tell you stuff. And it's not easy to check and cross check and to stay on top of what's going on, especially in a complex transaction. The more parties involved, the harder it is to stay. I mean, I can't even imagine how many phone calls on a really big real estate deal have to be made just to get everybody on the same page, just to even start the closing, right?
Yeah. Oh,
So here you can use the power of the blockchain even to vote and to do the governance and stuff that's required to actually execute on some of these grand plans that you have.
Yeah, I mean, there's 256 offline touch points for just a residential deal. I haven't even counted it for commercial, which, we reduced down to 4 clicks, literally. Now, it's not that simple, folks. All this has been done up front, but at least you don't have to go through that process for every single investor in one of your projects. It's just 4 clicks, as easy as buying a book on Amazon and you own a piece of this real estate because everything's on that coin. Everything that you want to examine is all there.
Now,
I think
Mark,
Kurt had his hand up too. So,
oh yeah, go ahead, Kurt.
Hey, yeah. So, my thought is why? How come this? Well, it sounds so perfect that it should be. I mean, you should be a billionaire. In other words, it's really perfect for the real estate market, which is probably one of the largest industries there is. So
280 trillion. But
there you go. So what is preventing you from scaling this as quickly as possible? Because it seems like such a no-brainer. And I mean, I don't think, obviously, the consumers are fine. I would say this last year, they're finally getting comfortable with even the idea of Bitcoin, because of all the ETFs. But to me, is it just marketing? Since I'm a marketing guy, or is it your own infrastructure that prevents growth?
Okay, in order, because I study this a lot, right? In order, it's not clear regulation. You guys saw what happened when the SEC finally got some sense in them. And by the way, only 3 out of the 5 did, and allowed ETFs for Bitcoin. What's happened to Bitcoin? It's almost it was at 72 yesterday, 72,000. So because there was clarity around what's going on. So we have a regulatory issue. That's not true in El Salvador and Dubai, but they're smaller markets. So that's number one. Make it clear. What we're doing is legal, but it's like, we're going through all these, like you said, a Reg D is a pain in the ass. Exactly. It's a pain in the ass. And getting that done for every property is a pain in the ass. We've tried to templatize it as best we can, but it's still, we got to go through that process. It's ridiculous. All right. So that's number one. Number two is education. People associate tokenization with crypto, and they've seen all these crypto bad actors. I blame ourselves in the crypto industry for not weeding them out and getting rid of them, and having some sort of independent analysts that are saying this is bullshit. And NASDAQ has it. All of the big exchanges have it, where they're not even letting them on the platform, and they'll kick them off. Instead, we're kicking off companies. Coinbase kicked off XRP and Ripple, which is way above board. Full disclosure, I'm a Ripple shareholder, Ripple the company, but still way above board. They're doing everything they can. They're begging them to regulate them. So that's number two. Number three is kind of that old school mentality of, you know, I've got to see it, touch it, feel it type of thing. We've seen this in anything that's been digitized. It just takes a little bit of time. But they're always an excuse. The excuse is, well, the regulations aren't clear, or I don't know enough about this because the market's just starting, you know, to educate everybody else. And then we have this crypto filter, or, oh, this is crypto, but crypto that owns stuff, but I don't trust crypto type of thing. So those are the main reasons. We're going to get through this. It's going to take, you know, 3 to 5 years.
Definitely. I mean, other than what we were texting each other about, but to me, this is, I would love to be involved with this to help, you know, market it. And I think you're right. I'm not going to have any expertise on the regulatory issues, but in terms of the process, when something like this is, you educate, and then you educate, advertise, and it's too important. I mean, it's going to free people. I mean, it's going to allow people of all, you know, again, it's a democratization, you know, of the economy. Anybody can get involved in $1 billion project at that point, you know, and then it allows the on the lower tier, you know, individual owners to either raise capital without going to banks. I mean, it's the whole thing is amazing from a benefit point of view.
Yep.
So,
I democratization of investments around the world, it'll uplift other countries. It will uplift investors, people here that can't get involved in these billion-dollar deals, as you've said. It's going to be a big game changer, and I hope government adopts it quicker because they can do the same thing with their government holdings. But
you know, have that as part of your organization? Do you have, like, you know, do you have people that are already talking to the senators, or that connection isn't there yet?
Not yet. I do talk to my competitors, and we all do different things. We're not true competitors, but you know, it's a $280 trillion industry. I mean, it'll be a long time before we cross paths, but we are first trying to agree on a standardization for secondary market trading, and then we will start the lobbying efforts. But you've got some pretty big people in crypto that are doing it and not having a lot of success. I think we might need the SEC and to have some changing of the guard, if you will, before a lot of this takes place, which could happen this election. Maybe it doesn't. I don't know, but they don't see it as a problem. So if anyone knows Gary Gensler, I'd love to go talk to him. He's going to say, well, what you're doing is legal. You're following the law, but it's more than that. There's so many more things like smart contract laws and all the things that we need clarification around so that we're not breaking the law. And then streamlining of some of these other things that we talked about, like Reg D and Reg CF, for something like this.
Great comments. You know, before we move on to Kenneth, I know he has some questions. I just want to say that I love Ripple. It was one of my first investments back in like 2018. And I'm kind of curious, do you foresee Ripple, you know, becoming, you know, bigger and getting, you know, approved by SEC and becoming an ETF?
Well, I think they've already won some of the rounds with the SEC. I do think, I don't know if SEC will ever approve them. I know it's holding up their IPO, which I'm pissed about. But I think there will be some clarity eventually, whether it's through the courts or through the SEC themselves. And they'll be just fine because they really are. Maybe in the early days, they didn't really act like a utility token. Maybe it was more of a security. I don't know. I'm not an attorney. But certainly now, XRP's got great utility, and Ripple's, you know, kind of divorced from that. And they're doing their own thing, similar things, but their own thing. So I think at this point, I don't know how you could call it a security. And the way they're marketing it, the way it's behaving, the way it's being used out there is a valuable service to society.
It's payment transfer. I was meeting with the CEO of I think it's commodity trading group, and they are adopting, actually utilizing XRP to transact with commodity trades. We're talking about like wheat, corn, sugar. So I think that's a game changer right there, just for a utility. That's a case study right there.
That's why I invested. Exactly. Yeah.
Thank you, Kenneth.
Yeah, so the first thing I wanted to say, just for people that are listening to get some clarification on, is, you know, we've spoken kind of about the words like crypto, like crypto, as opposed to tokenization and these types of things. So let me make it very simple for anyone that's listening that was kind of confused with that type of thing. So cryptography and blockchain technology, which is built on cryptography. That's what all this is built on, right? So that technology has been wrongly labeled, you know, crypto. The scams and the bad actors are, these items are built on top of smart contracts, which is built on top of cryptography, right? So this is comparable to the internet, when the internet became public, right? So the internet was simply a tool to build on. HTML was simply a tool to build on. Now, because it's public and it's open source for the most part, what is built on that is not, you know, is not directly related to the technology itself. Okay, so for those of you out there looking at this, so the tokens, so scams, so we can take FTX, which is probably the most known one, right? So this FTX, the token, the company, the DeFi protocols, the exchange that was built on top of this blockchain, this cryptographically sound blockchain, is just an item. It's the same thing as a website, right? So we've seen, as the internet became more popular, that you had people that were building that could build, you know, child pornography onto the internet, right? But then you also had applications like WebMD that save people's lives, right? It's about what you build on top of the technology. So and even in tokenization, so when you're talking about tokenization, even though you could, like, a lot of people I see moving away from the term crypto, tokenization is still built on cryptography, right? That's the only way it's as secure as it is, because cryptography is what gives us the ability to see, to use these blockchains as ledgers, as stores of data that are immutable, these types of things. So I just want to make that clarification there, that it's not about the technology, it's about what's being built on top of the technology. Number two, what I'm interested to ask Mark about is so I'm a big proponent to decentralization, open source, access. So what could you expound a little bit more on what an ideal situation of, like, say, secondary sales of these tokenized real estate assets look like? Because in my mind, it makes sense to me that if I go to a operation like yours and I have a commercial building and I say, hey, can you guys help me tokenize this and sell it? You assist me with that. I tokenize it and sell it. Theoretically speaking, staying with the ethos of cryptography, of blockchain technology, I should then be able to take my 1,000 shares of said property, and if I and go onto an exchange that supports that token type, and if I want to sell it in 100 share increments to Bill, Susie, Sally, whatever, at whatever price, I should be able to do that, and the market should dictate that price, right? Based on the asset. What is your idea of what are the roadblocks to that currently? What would, in an ideal world, what would you like to see that the function and the use case of those secondary sales looking like?
Wow. I mean, that's a great question. The problem, of course, is that there aren't billions of shares of stock out there, but there could be billions of shares of tokens for property tokens, as I call them. There's not a possible market that could support that with, the amount of investors that are out there and so on and so forth. So although we will have a secondary market for trading of those tokens, there needs to be something more. And I'm really going to push the limits here of our viewers' thinking. But we are also creating an automated market maker that will act as how would I call it? I'll call it a master coin that'll purchase property tokens at their right price, and AI would determine their price. So we guarantee liquidity in these markets because, when we put on 1,000 properties onto our platform, those are 1,000 different tokens. How are you going to know? I guess you could sort through them in the secondary markets, but there's just not enough investors right now that we can bring to the table to provide a liquid secondary market for all those property tokens. So we've had to think creatively about how to make sure there is a secondary market for those property tokens. The first step is having anyone involved in real estate tokenization provide, pool all of our tokens and our investors in one place. And we're working on that now. Second is institutional. Institutions would come in and provide some liquidity there. But there's going to be a long-term and a short-term problem of there's just going to be more properties out there than there's going to be investors. So there's this other concept that we're developing, I can't speak too much about, that will guarantee it. It'll guarantee a purchase price based on an AI algorithm, based on what information's in the token itself, give you a price for that secondary market, give you a price and whether you want to sell it to it or not. What that master coin does, it turns into a super REIT, and anyone can invest in that super REIT token that's getting dividends, and as properties are sold, they're getting the proceeds from that. So 2 approaches to a secondary market. The third approach, which will take place a little bit later, is, well, if there's not a secondary market for it, you can certainly borrow against it. So the DeFi aspect of us collateralizing your tokens, those property tokens, and borrowing against it, because of what way better to borrow against that than some high beta utility token that you can have a margin call tomorrow, as opposed to a property token that's very stable in most countries, and what the value is at any one point in time. So those are the secondary market for tokenization will look different than cryptocurrencies. I won't say crypto because you're right about what you said, Kenneth. Cryptocurrencies that are out there that are just utility tokens. Mm-hmm. And so a specialized type of market needs to be created for that, and that's certainly on a roadmap.
That's very interesting, because I don't know if you're super familiar. It's a kind of a new concept now, but because blockchains there are dozens of blockchains out there, and some of these blockchains interact with each other and some of them do not. For example, I cannot mint an NFT on Solana and then very easily transfer it to Ethereum, right? It just doesn't work that way. So there's a pretty new concept out recently with these instant fulfill exchanges, which are basically just using very complex aggregation systems that take place on the back end, and they're literally allowing me to say I'm on Celo, like some very obscure chain, and I have, say, Ethereum that is wrapped on Celo, and I want to take that and I want to take it over to Starknet, but I want it on Starknet to be in a stable coin, right? Now, to do that traditionally, I would have to bridge that token from Celo to Starknet. I would then have to go to a swap to the token that I want. It could take me 2 to 3 weeks, right, to get through that process because of the bridging time frame. I would be a lot, all this stuff. So there are some. I mean, we've actually built one in BlockSafe, but there's several, dozen out there that they basically just aggregate all of this information and they instantly settle utilizing public access liquidity pools. And then they charge a fee for the settlement on the back end, which it still takes 2 weeks on the back end to settle this, but in the front end, you're getting those instant accesses. So in my mind, it's like if you could have a uniform agreement with open access to wherever each of these individual companies, like your own and like your other, not competitors, but the other visionaries in this space, are listing these types of assets and aggregated them accordingly under a platform like that, I feel like it would be fairly simple. And I'm not sure I follow you along to say that there's not enough buyers out there. I think that it's just not understood. I think if we tokenized 10% of all real estate, I think within a year or two that there would be enough buyers there to eat up that demand. I mean, I've heard you know, we are, the cryptocurrency in itself is still very small, but I think that because of the ease of use, because of the pain that it takes out of the process, and I think with the right marketing that could be done. But that's very interesting, Mark. I appreciate your thoughts on that, because this is very, very new, innovative stuff, but it makes so much sense. It's just trying to find the best way to make it work properly. Last thing I'd like to ask is, Mark, could you tell us a little bit about your current raise and what you're looking to find with investors, and then if there's any potential investors that are listening here or on the panel that would like to get involved with that, how could we do that?
Okay, well, first of all, I'm not paying Kenneth to say that, but I'm very happy that he did. We are raising 5 million. We've got a Reg CF and a Reg D, so you could be accredited or not accredited. You can invest either way. And now's the time to get in, folks, because it's not going to last forever. So if you are interested, make sure you reach out to me or Crystal or anybody that knows me, and we'll show you how to get involved. But thank you. Yeah, 5 million. We've had one previous round. This will be our next, and this is really our scaling round. The platform's built, the platform's ready. Now we need to scale it in a few countries, and then we'll go to more and more as things develop.
Beautiful. Thank you, Mark. I appreciate this. This has been, sometimes I get on these panels and I, you know, move along because it's stuff that I talk about on a daily basis. But I like the tokenization of real estate, to me, and this is to me talking to anyone that's listening, is very, very interesting. I haven't gotten a gut feeling or done data analysis on the potential of this and been as excited as I was since the blockchain integration in gaming, right? So for those of you that don't know, I'll give you some backstory. So I was one of the very earliest investors on the big blockchain craze with gaming, with, you know, Axie Infinity and Peg Axie and Krabata and all these ones that made millions and millions for months, and they were very early, and so they hit a lot of roadblocks and everything. But, you know, massive gains and stuff on them at the very 1% of their growth. And I feel like that's where we're at with the tokenization of assets like real estate. I think that it is going to be so unfathomably large in 10 years that we're going to look back on conversations like this. And there's going to be probably plenty of you listening out there at this interview thinking, I heard about it right now, and I didn't get involved for, you know, 3-4 years until it was mainstream. And you're going to look back and be in the same place I was when I was listening to an AM radio station in 2009, and I heard about this thing called Bitcoin and how to purchase it. And I thought, oh, okay, well, that's weird and interesting. And then, you know, 4 years later, you know, we see these tens of thousands of X's that could have happened. This is that type of moment, because theoretically speaking, the market cap of real estate is much larger than the initial addressable market cap of Bitcoin, and we're much earlier on in the stages of this. So I would encourage anybody. I'm not saying go out. This is not financial advice. I'm not saying go out and invest in tokenized real estate. What I am saying is that there is a very large possibility, based on data, based on ease of use, based on how much more simplistic this makes it for the buyer and the seller, to at least start looking into it. Like, at least start looking into it. Do yourself a favor and look into it. And then through your own research, if you see the same things that I see myself, you know, maybe start thinking about putting some allocation of your investing funds into projects like this, because somebody is going to be the Coinbase of this, right? Someone is going to be the platform that does this off. I mean, and you know, hopefully, you know, Mark, you know, good luck. I hope it's you, and I hope it's your organization. But this concept is going to be very large. So definitely do yourself a favor and do some research, guys.
Our tagline is the Coinbase of real estate.
Oh, really?
I
did not know. I did not know that. I did not know that. But no, it makes sense.
We'll probably see Mark on CNBC one day.
Well, let's hope so. But we need to do it now, because the education needs to take place now.
Exactly.
And the more I'm out here speaking about it, then I get calls from people that are like, "Oh, okay, we want to do this, that, and the other." It's beautiful. So people get it. It's just getting the word out, and then I have to tell them, "Hey, we've got a regulatory issue potentially, not in everything, but in some things." And like, oh, okay. But keep the calls coming. It's going to clear up. things will be easier. It can easily be done today. It's just not as quick as it should be. Which is probably why, the crypto world went around all these regulations and just issued utility tokens and all that because of the friction. The amount of friction is immense. And I actually think it made things worse because our regulatory bodies didn't step in and regulate, or at least give guidelines around it, because it allowed any scammer whatsoever to come in and do what they did. And we saw a lot of that. We still see some.
Rebase.
Yeah. By the way,
Are you guys?
did we talk, Crystal? I don't know if we have any time, but did we talk about?
We have just a couple more minutes. Let's go ahead and whatever you would like to talk about or that we haven't talked about, let's talk about it.
I can do it in 10 seconds. It's very important. Because it's tokenized, using a secure method, your wallet can be hacked. You can have tokens stolen. I think we talked about this, but it's reversible like that, easier than a credit card. In fact, they need to be whitelisted themselves, so they're revealing who they are before the token would transfer to that wallet. And even if they do reveal who they are and they're somewhere stuck in a country where there's no extradition or way of getting it back, the owner that issued the token could cancel it and give it right back to you. Very, very safe, folks.
That's wonderful. Well, thank you so much, Mark, for joining us today on another episode around the crypto caniverse. Thank you to all of our panelists and our guest co-host. I appreciate each and every one of you. With that being said, I would like to pass the mic over to Alan. Actually, Mark, where can people reach out to you? Let's go over that real quick.
Almost anywhere. LinkedIn is probably the best place. Although I can't accept any more friend requests, you can certainly message me at linkedin.com/in/Fidelman, Fidelman. You can go to our website, www.smartblocks.xyz. You could reach me there. Those are probably the two best places. Twitter, any social platform really, but those are the two best places.
Yeah, and then where can people come and find your content? I know that you have a YouTube channel. What is that?
The best place is the newsletter, and that's at kryptonized.substack.com. I don't know if you have links that we can put these into, but or you just go to Substack, which is where it's at, and type in Kryptonized with a D at the end. It'll pop up first on the search list.
That would be wonderful. We'll drop this in all the social media chats so people can come check out your newsletter. Thank you so much. Alan, can you please close in prayer?
Yes, let's bow our heads and pray. Dear God, thank you so much for another week of our Cryptocaniverse, and we praise you. We thank you because you always bring the right people onto our show. Thank you for all the guests and the speakers that come on a weekly basis to share about their knowledge and their thoughts in cryptocurrency, as well as current projects they're working on. We understand this is truly a technology that you have created for us on Earth to utilize, for the financial institutions to adopt to make our ease and a way how we transact much easier, more seamless, and more transparent. We continue to pray for this group and future speakers that come onto our show that continue to bless us, but not only that is to have your Holy Spirit among us to guide us in the right path in all things we do. We know that at your greatest perfect time, in your timing, Lord, you would help us in all the things that we do. We want to make sure we glorify you, and in Jesus' name we pray. Amen.
Amen.
Amen.